today's special guest, you've seen him before, you'll see him again. Darwin Roman, from Jersey, all the way here to the Bronx.
That's right.
Darwin, thanks for coming.
Absolutely, my honor, my pleasure. Always love spending time with
Can you go with, just say that what you said before, because I want people to hear it. If you don't take action now, go ahead, finish it.
Right. So the whole point is, if you don't take action now, knowing the information you need to take to be able to get whatever it is you want to get to, and you don't take action, then you're no longer a victim, you're a volunteer.
A volunteer to be a victim.
Yeah, you're volunteers to be a victim. So whether it be your health, whether it be your finances, whether it be your spiritual life, whether it be your relationship, if you already knew what you had, what actions you had to take to make things better for yourself, and you didn't, or you foregone them,
You neglected it.
you neglected them,
Right.
you procrastinated,
Right.
then guess what? The consequence you get, deal with it, embrace it, embrace the suck because you created yourself.
You volunteered for it.
Volunteer for
All right, let's go back a couple of years. What year was it we met?
The year was 2018.
2018. Okay, so we met in 2018. I had founded the Bronx Chamber, the Bronx chapter of NAHREP. You had founded the what part?
South Jersey.
South Jersey Chamber. I'm not chamber. I keep saying that. Chapter of NAHREP. I lasted about 6 months. You lasted a year.
A little, well, a little longer because of COVID.
Right.
So technically, they rolled my term over an extra year. So really 2 years. I would say. Yeah.
But wasn't that supposed to be the thing?
Yeah, it's supposed to be president, then past president. That was actually, I guess they really throw 3 years because they would just that COVID year didn't count.
Right. So I want to talk about networking organizations for a second.
Sure.
I was talking about this earlier with somebody, and I just want to put it on record, on video with you. So to me, networking means we're a group of people, and we're all positively, and I mean that whether I mean by goodwill, monetarily, whatever metric you want to use to measure that, positively influencing each other's sphere, right? Like I use the example, in a real estate transaction, you have about 6 people: mortgage, real estate, attorney, title, insurance, inspector. So 6 economies on one transaction. And I feel that I met some good people in NAHREP, I want to say that. But I also want to say that I met a lot of people that weren't doing any business. And that was one of the pieces that led to me leaving so early. I'm not really, I believe that you should be doing something and then be known for it. But if you're being known for doing nothing, that becomes like kind of anti what I'm about. So that's kind of what led me to my early departure. What was your experience with everything?
Yeah, I mean, yes, I credit the organization to a lot of the relationships that I've built over time, and you're one of them, man.
Yes,
I mean, had not been for that, we wouldn't have met.
Right.
So I do owe a lot of credit to it. Well, then you're right. After a while, the sizzle of it at the beginning tends to fade away when you start realizing that maybe individuals that are just spectating versus participating.
Correct.
And we're not looking just to spectate. We want to participate.
Right.
We want to grow.
Nobody's contributing. Right. Yeah.
Right.
They're just
then,
criticizing.
Yeah, and especially on the leadership side, some of them, especially say, and I will put it out there, which is definitely a universal problem across any organization, is some board members. Some board members, they love to be given the title, but not necessarily want to do the work that comes with that title and be able to put their effort in there. And I remember in the beginning, I would make it very clear to the people that I was leading and said, listen, you have to do your part. You can't just show up to the event, take the picture, and call yourself a leader, right? When you really haven't done much to earn that title. That's like going out right now, putting on a military uniform, and calling yourself a veteran. All right, that's actually a federal offense called the Stolen Valor Act. You know, in the eyes of the government, you'd be thrown in jail. So why would you think they'd be okay to come out here in this organization, put on the uniform of a leader when you didn't do anything for it?
Right.
That's stolen valor. That's the way I see it.
Was that actually a conversation, or just kind of like indirectly
conversation?
Spoken?
I'll to my board and say, listen, we all have our individual jobs, but at the end of the day, I said, I'm going to look at this as the Marine Corps. The Marine Corps has different jobs. You have a communication person, a data tech person, there's even plumbers in there. There's a tank specialist, right? Chefs. But the bottom line is that every Marine is a rifleman. Everybody goes to boot camp the same way, learns how to shoot the M16, because at the end of the day, when it comes to combat, it doesn't matter what your job is. Your mission is to make sure you win the war, right? And so it's the same thing there. It's like, regardless of what your position is, if something needs to get done, you don't just sit back and say, well, it's not my job.
Yeah.
No, it is your job.
Yeah, there's too much of that going around. I felt a lot of people were just wanting to be posture, if that's the word.
Sure.
And look a certain part, but at the end of the day, I didn't really have interest in that. And I think that's what kind of also led to my exodus. But you're also involved with the Latino Chamber of Commerce.
The Latino Chamber of Commerce,
So talk about that, please.
Yeah, so that organization is slightly different. And by the way, going back to with NAHREP, I've learned so much from the organization. They're wonderful in their structure. And the reason why they're 100 chapters large and 50,000 members wide across the country, right? Because they're obviously doing something right with their structure, and which I admire tremendously.
Yeah.
And so I looked at putting together my organization because I was actually, to go back into that, I was a president of a chamber before NAHREP.
Okay.
So before NAHREP, I was already president of the chamber, but the chamber was a very smaller version of
the chamber you are
I'm in right now. Yeah,
okay,
the original one, which is a county level one.
Okay.
Now it's one way beyond county.
Okay.
But at that time, it was just then. But then as I grew in my process, I learned what to put together, how to structure the organization to make it grow. And so the Latino Chamber of Commerce is similar to NAHREP in the sense, though, and the difference, though, is that it represents other industries. So you're not just real estate; it's every other. I mean, you can literally sell lashes or have a bodega.
Anybody in business.
Anybody in business.
Okay.
If there's something you got to do to earn a check, and it's not through an employment. And by the way, you could be in employment. You know, an entrepreneur versus an intrapreneur. Maybe you work for a company where it's salary, but also bonus based and performance based, and so you have to make it happen, or else you have no job.
Right.
Same idea. And those people are welcome too.
Yeah.
So we do events for that group. About every 3 to 4 months, depending on what we're doing that year. Put them together so they can network, and also beyond that, tie in a charity as well, which I felt was an ingredient that was something important to me for the organization. So every time we do an event, we also partner with another nonprofit, another charity. Like, for example, this event coming up tomorrow, Deals and Heals. Last year, we raised money for an autism organization. This year, we're raising money for basically a domestic violence organization because of the fact that this month's Domestic Violence Awareness Month. So that's the mission that we took on. That we want to educate, we want to use resources, we want to advocate for our members, which I did recently. I'll tell you a story about that. But then also do it and have the philanthropic arm of it also help impact other people in a better way, right? So that we got to serve others. Servant leadership is something that you and I talked about
all the time, yeah.
And that's why we do so well in what we do as a leader, because we serve others first, and that leadership follows that kind of trait. And advocacy. Actually, I advocated for 2 business owners recently in a local area, a local city in Jersey, that ended up having a great result at the city council because they were applying for their cannabis dispensary license.
Oh, that's a new industry, right? Yeah, a lot of people, a lot of resistance to it.
So I went, and part of the deal, right, is I go and I went out and spoke on behalf of these members to the city council, addressed them as president of the chamber. And at the end of it, I'm not saying that what I said to that council made a difference, but I'm pretty sure it helped to impact the vote turnout, which ended up being that they voted yes in favor of these 2 dispensaries to move forward with the process of licensing.
Okay.
So that's what the chamber does.
Okay, so you advocate for business owners that don't have a voice, and it gives them a larger platform so they feel that there's more influence. Yeah. And that will sometimes get you the vote, whereas by yourself, you might not be seen as that having that much of an impact on a particular area of the city. Get it? Yeah. All right, so finally here, the reason why we're here. Let's talk about it. Real producers of New Jersey.
Central Jersey.
Central
Jersey Real Producers.
All right, Central Jersey Real Producers. Please tell everybody what that's about.
Sure, yeah.
I'm involved, that's why I'm plugging it.
Yep. Excited to have you on involved.
Absolutely.
So I'll give you the macro level of it, right? So Real Producers Magazine is a magazine platform, and it goes out to the top 500 realtors of a specific area. I happen to be mine is Central Jersey.
Right.
So the top 500 realtors who typically will be in what's called Circle of Excellence, which is an award designation or a class or system that recognizes producers that are doing a certain amount of business per year. And
we just want to make sure you're qualified. That's why there's a minimum criteria of production needed. That's what a Circle of Excellence is, just for guys who didn't understand that.
Yeah, exactly. Yeah,
just being real.
No, that's good. We're being front, because up front is that those are the folks who are actually receiving the magazine, because as a corporation, they want to recognize those top realtors. So they receive the magazine for free. You can't buy it. And also the other part is we feature the realtors locally in that area in the magazine for free, and they can't pay for it either. They can't pay me to be in the magazine. They have to be selected.
No payola.
No payola.
You know what I'm talking about.
Yeah, exactly. So they can't pay to get in. You can't buy the magazine out in stores or anything like that. And so it creates something different here. It's a third-party validation of their successes of what they've done in the real estate industry.
Okay.
And then alongside that, we have what we call preferred partners like yourselves,
Yeah.
like yourself rather.
H&R Capital is a preferred
H&R
partner.
yes, a preferred partner
Yeah.
that has advertising space in the magazine, so that you benefit from having these top realtors seeing your ad and seeing your company every month.
Right.
And then beyond that, we host live events. And those live events, though, are different than the other events that you and I have been to,
Right.
because it's closed off to the public. So
Okay.
only the realtors that receive the magazine get invited to the event, and only the preferred partners like yourself that are currently in the magazine as advertising partners get invited to the event, and that's it. So it creates a different ecosystem of professionals where the networking is at a higher caliber.
Yeah, it kind of like trims away a lot of fat, a lot of the posturing, right? And I guess people have to be qualified to be at the event, which makes things a little easier because you kind of know who you're talking to. Because you go to certain networking events, you can talk to somebody who's never bought a house before. You could talk, like, it's just too wide. It's too wide, and you don't know who you're talking to, and sometimes it leads to a lot of you get the same redundant questions. I'm sorry to say it, but it's true. You get the same question like, yo, what is hard money? What is this? What is that? So yeah, I'm plugging that right now. So people understand that, like, I'm more B2B than B2C. And when I say by that is that people usually come to me when their first option failed, right? So people be like, oh, I gotta save this deal. It's always the same thing. Omar, save this deal.
Yeah.
So I think a reason I wanted to take some advertising space in the magazine was to actually go more B2B, so that if you have a realtor in Jersey that is buying an investment property for a client, and they're trying to do it with one lender, at least they'll know of me as another lender option. And my track record speaks for itself. You can speak to anybody I've closed for. They're only gonna have good things to say, because even if I can't do it, I'll tell them I can't do it, and I'll tell them why it can't be done.
Right.
So that they don't go to the next lender and try to, I don't want to say they're going to mislead the next lender. I'm just going to say they omit fact. And they just end up spending or wasting a lot of time on people. I think that has been like the redundant cycle, or the repeating story that I've been seeing recently. But I also do see in the economy, and I'm sure you can attest to this, where you were seeing a thinning of the herd. Right? Because you have a lot of guys. We were talking off camera. We won't mention what we were saying, but we have part-time agents that are out producing full-time agents. That, to me, makes no sense, but it does. It makes sense because it comes from the referral source and the platforms that you're associated with. Back in 2021, when things were easy, rates were low, everybody wanted to buy because everybody qualified. Now in 2023, interest rates are back 6.5 to 7%, 7.25%. And it's definitely thinning out the herd, but not just realtors, also loan officers, because I believe 70% of homeowners are in a rate below 3%. Jeez. I think that was a stat that got pushed around a little bit. So either, unless you have to close or have to buy, or you really want to, people kind of holding on. They're kind of figuring out, it's so cheap. So unless you have to, before it was kind of like, why not? Mm-hmm. Right? Why not? It's so cheap. Let me get into it. Why not? It's cheaper to own than to rent. And that's kind of that paradigm is starting to shift. I'm starting to see that, and I'm starting to see the thing of the herd, because I'm getting more and more calls from realtors from deals falling apart somewhere else. That's what I'm seeing.
Yeah.
What do you see in Jersey? And this is just me in the Bronx and the 5 boroughs.
Yeah, similar thing. I mean, the thinning of the herd, right? And notice that, but the herd that stays around is the same herd that's been there since 2008 or
before the curve.
And it's what I'm noticing, even in my conversations, right? This is just me having conversations with realtors with regards to maybe featuring them in the magazine.
Okay.
And right, so on the street, I'm hearing more of those conversations of some realtors going from this level of production to this level of production. Some realtors going from being full-time to maybe part-time to not part-time, having a job. That's happening too, right?
Exiting, okay.
And then I'm having other conversations with some of these other producers where they go, I've gone from bronze level to silver level Circle of Excellence, which is a step up.
Right.
One realtor said, 2021, I had personal challenges, huge personal challenges, devastating ones. 2022, I started building a team. 2023, we're about to do 100 transactions this year.
Nice.
It's just those. Another woman saying, I've been platinum level, which is the top level level of production Circle of Excellence. For the past 10 years, I'm hitting it this year again. Nice. Like, she just didn't even blink saying it.
Okay.
So it's just refreshing to hear those kind of conversations, as opposed to the ones that always have a stormy sky attitude about it. And I asked even them, I said, what have you done differently or the same? And a lot of have the same theme. One of them said, a couple of them said, I don't watch the news anymore. I don't want to hear it. I go, what? I go, really? She goes, I don't want to hear it. I'm not hearing the news because that news is just going to mess with me and thinking that this can't work. So I don't want to hear it. I don't watch the news. And I just have a positive attitude that these things, that my inventory is going to sell, my buyer's going to get the contract.
And she's one of the successful realtors.
Yes.
Okay.
Highly successful.
Okay. So she's diverting her attention.
Diverts her attention into the right areas, right? Focusing on a solution, not magnifying the problem, and taking action and saying, I'm doing service, I'm doing buyer seminars, I do maybe more Instagram lives. I'm actually putting door hangers. Remember those things? She's like, once in a while, I see a FISBO, right? For sale by owner, knock on the door. She's like, who would have thought these old school things that still work? She goes, some people got so used to the wave of what happened in COVID era that they let go of the fundamentals of what this game, how you win this game, right? The basic blocking and tackling.
Yeah. I think 2018, 2019, we saw the proliferation of like all these agents, right? People coming in because it was getting easy, let's be honest. And then what I heard a lot of was people being more interested or more concerned with systems than practice. And I think, to me, that was a big indicator of, this shit ain't for real. Because I want to get a virtual assistant. I want to get this. I want to have a CRM. I was like, do you have any clients?
Right.
I was like, do you have any clients? No, but when I do, I was like, you're not gonna, because you're missing the basic ingredient. You're missing. And that's what I saw, and that's where I was kind of like, this is crazy. I was like, why would you think you need? Well, when I was like, but where are you getting your clients? Zillow. I was like, look, Zillow's cool. I mean, social media is cool, but it's not the only thing.
It's a tool. It's one tool.
Right. It's
you can't golf one club
out of many, right. And that became, to me, an indicator of what's to come because and I'm gonna call them kids, right? Anybody born after I would say 99 to me is a kid, right? So like you have, I'm doing this, I'm doing that. I'm like, all right, well, we'll see how that works. And you start seeing them in certain areas, like certain events, and they're doing the same thing. They're not doing much, and I mean, no shot at them. But then they come to you like, what is it that you're doing? I was like, the same thing I did in the beginning. I was like, I added, like you said, another tool. But I never took away the first four, the fundamentals, right? It's almost like doing a incredibly complex Olympic lift without knowing the basics. Right. Like it's the same concept. So you might get away with it, but eventually it'll start breaking down, and you won't know how to fix it. And I think that's kind of what I've seen. I started seeing, and now it's kind of ghost town. Now you have less and less people. I mean, you see it. I definitely see it. It's definitely a thinning. But I think it's good for it's good for the business because the practitioners, the guys that are really, guys and girls, gotta include everybody, that are doing what they're supposed to be doing in spite of everything changing. You keep pushing forward, you will keep continuing to get market share. And what's happened is, then you have the people, like you said, focusing on the negativity and focusing on things that they can't do instead of focusing and spinning their focus onto what they can do, right? Yeah. That I really feel that's the difference between people that are gonna excel in any market and the people that are just gonna be reactionary and almost like you said, instead of being in the arena, they're watching the arena and they're like they have so many criticisms and not enough contributions that it becomes almost blatantly obvious to anyone looking from the outside in, except to them. And I guess there's this fear, right? Because they kind of hang out together, right? People hang out. People that complain hang out together. Yeah. So they kind of like they have a counter-dependent relationship or codependent relationship, and it kind of accelerates it. You go to different spheres, so you see Jersey, you see the Bronx, you see Westchester, right? Where are your stomping grounds at? Are you staying in Central Jersey? Or are you still all over the place?
No, I'll still expand from time to time. Okay. Recently, the past month or two, I've been more focused in Jersey just because of the events I have going on.
Right.
But I still whenever I can get out of my sphere and be able to connect with other people that are maybe in different markets because there's always a different perspective.
Right. And what have you been seeing in like Central Jersey? I haven't been in Central Jersey in forever.
What I've been seeing is, in terms of the real estate market, what's going on there, or
The professional attitude in general.
Professional attitude in general.
Yeah.
You know, that's the differentiator is that, okay, for example, that's why I'm noticing the numbers are different, or rather the attitudes are different with the realtors I'm speaking to.
Okay.
In the sense of how things are going. So I'm seeing a very big divide. Some of them are saying this is terrible. Some of them are saying business as usual. I just had to make an adjustment. And that's really what's going on. And so, but I'm also hearing it not just from the realtor, ironically, also the ones outside of that in the real estate industry, but lenders, title, insurance brokers that will say, or home inspectors or real estate attorneys that say, oh, it wasn't as good as it was 2 years ago. Yeah, but compared to what? Compared to a black swan event? It's like, wasn't real, number one. But then number two, it's like, I was like, well, you know, you have to understand, it's really tough out there lately. I said, well, tough for who? Because I'm talking to some other people, it's not that tough for them.
Well, tough for who?
It's tough for who? So it's like, well, then, I mean, then the question is, are you allowing it to say, is that tough? Or are you just not being creative enough or resourceful enough to be able to figure out how not to be in the bottom pile and be able to push up?
I think people, during COVID, well, after COVID, right after COVID, when people were dying to get out, all stimmy money was out, all the interest rates were artificially deflated and things like that, people made a lot of money, right? And they fell into this false sense of security. Like, to me, I'm like, yo, get it while it's hot, right? Because it's not going to be like this forever. And then what happened was, right now we're in the not forever part. And that's fine. That people still need to buy, sell, right? Refinance. There's still what I call necessary financing, right? Before it was just kind of like, why not? Like, shit's so hot, why not?
Why not? Yeah.
People are refinancing just to lower their rates and more of convenience. I just cut a piece of content talking about DU and LP, which is desktop underwriting and loan prospecting, which is the AI of the bank world. Most people don't know what that is. To me, I'm like, that's what makes all your loan officers look like fucking geniuses, because they're, oh, you just need this and this. Oh, that's all you need. And I'm like, yo, baby, it's a computer program. Like, he's just reading something,
off of
right? But he won't tell you that, right? And now the AI is telling them something else. Like, yo, man, we need more. We need 6 months reserves. We need this. We need that. And they're like, hey. So all of a sudden, everybody's like, oh, but why are you being so strict? Understand, they're not being strict. They're just reading off the paper. Right? They're just reading off the paper. So in 2021, when things were easy, even banks were very kind of like, you know, so cheap. I don't know if you know this, but the government had passed a law where they were buying all the MBSs. They were buying all the mortgage-backed securities. Unlimited. Wow. So that meant if you were selling, I was buying. Right. It's just business, right? If I have something to sell, you're buying it. Am I not going to sell more because I have a guaranteed buyer?
Of course. Yeah.
Right. So that stops. And this is where we are. But that's more of a economic, holistic view where normal Barry the banker won't talk about that because they don't know. Or they just fail to fucking want to talk about it. Yeah. But it was like a perfect storm, right? Yeah. So if you weren't making $1 million, you were doing something wrong. My personal belief, you were doing something wrong. If you were doing 12 transactions at the hottest market ever in history because it was a pandemic, bro, shit's gonna get ugly for you really quick. Just be honest. You just think about it. Like, where were you? Yeah. Like, 08. I was doing business in 08, the meltdown of America, right? FHA stepped in, and I think they were doing 90% of all the mortgages in America because the government had to step in. So, pandemic, same shit. All right, we'll buy everything. What do you mean? I'll buy everything. So you saw all the banks started turning up. Hey, man, let's go. Then they got aggressive because they had somebody to buy it. Again, going back to buying and selling, supply and demand. If I have somebody who's going to definitely, no questions asked, buy everything I'm selling, I'm selling everything. Yeah. Right. So now we see the consolidation coming. I think who Wells Fargo is getting out. Chase has morphed into, and Citibank have morphed into community bankers. Like, they want to serve the underserved.
That's right. Yeah.
Yeah. You've seen that, right?
TD too. TD as well.
It's all branding, guys. All branding.
And but also who was also kind of pulling back is PNC.
Oh, I didn't even know they were a player.
I know, not even. But
I'm talking about like the big banks, right? So Chase and Citi, they're going after the neighborhood. They want to help you, want to grant money, they want to do this. PSA, guys, the people that really qualify for the grants, and I hate to say it like this, but probably less than 10% of America. So it's all branding. It's all marketing. It's all it is. It's all, no offense. I'm not hating. If you qualify, I'm happy for you. But go into it with your eyes wide open because, oh, why don't I qualify? You know how many times I get a call, hey, man, can you get me that grant money? I was like, nah, man, you can call Chase. You know, go to Citi, do that. It just, because they're trying to figure it out. They're playing on such a level that, not to go off on a tangent, but they have to appease the government somehow, right?
Yeah.
So if they don't want strict banking regulations, we have to help the common man. I was watching Mission Impossible the other day. You know, air quotes, for the people, right? I don't know if you saw that. He was like, you know, for the better good. For the better good. I'm like, come on, bro. This is all marketing and branding, and it's all I see right now. I look at all these headlines. That's all I see. But having you on the show right now is just really, I want to talk about, you know, you're getting to see different people. I like to be around people that are doing things, good or bad. And what I mean by that is whether they're making mistakes and you know, not doing well, but they're showing traction, they're showing movement, trying to get momentum. I love that stuff. I don't like a bunch of people sitting around complaining, right? And that's where I've been in certain rooms and I'm like, wow, this is pretty horrible. And then I'm in certain other rooms and I'm like, there's still such a lack of financial literacy.
Yeah.
It's bananas.
Yeah.
Bananas. Have you seen that? I mean, to me, I'm like, yo, the internet's free. Everybody's on there all day, on YouTube, on Instagram. Like, you would think, you know, buying a house or buying a building is, most people aspire for it, right?
Sure.
So then it's like saying, hey, man, I want to look good in my swimsuit. Then you get ready, right? You start working out, you start eating.
Yeah.
So, like, if you're looking to buy something, you should start getting ready. You should, someone clean up Aronia's debt. So many people don't even, they don't even know where to start.
No.
And let's go into what you do, right?
Yeah.
Life insurance.
Yeah, sure. Yeah.
People ask you all the time, hey, I saw this on Instagram, I thought of you. So the guy goes, hey man, take $1 million policy and you pull out $100,000 cash. Can I do that immediately? I'm like, oh my God, no, you have to pay into it.
Exactly.
Can you explain that to people?
Yes.
Because people, yo, I paid you for $1 million policy. Why can't I get $100,000? I was like, bro, it's your, well, explain to how it's their money.
Right, exactly. All right. So, you know what? Let's look at it this way. It's, I said position already. I gave out the word. Cash value life insurance is another cash position in your life. There's 3 places where you could have for cash position. Number 1, the normal one is checking account, right? Then you have your savings account, which is better than checking because you're getting some kind of interest, usually.
Right. Right now, no, you get 1%.
Right. But then you have your cash value life insurance policy.
Right.
And then that's going to give you a better interest than the bank, and it's another cash position, and over time it becomes liquid as well. But if you don't open, you have to open up the account and start putting dollars into it, just like anything. So the same rule would apply to a life insurance contract. So so people tend to look at it as if you have $1 million policy and all of a sudden it's like a line of credit that you have with life insurance carriers. That's not how it works. What you're using is the values you've built up through your contributions every single month or year.
Hold on. Contributions mean money you put in.
That's right.
Just for the layman.
Money that comes out of your pocket to the company's pocket. Exactly.
Right? Let's make it.
That's
the money that
you
contribute, that you put in the account, then becomes something you can borrow against. It does not. It's not magic money.
No.
Okay.
No. And that's where people tend to fail. Or you know what? And you know what? I don't blame the consumer.
Right.
Because they're seeing a 30 or 60 second clip of something that sounds really good. And unfortunately, the people that are putting out this content are giving way too much the highlights of what's going on as opposed to giving a full hour of how it really works. And that's where I come in.
Right.
So if anything, I'm kind of, in a way, I resent some of this content, but then in other ways, I welcome it because the consumer wants to learn more. I say, look, if you really want to learn, get on a Zoom call with me for an hour.
Yeah.
I'll explain to you exactly how this works. And I've had people say, oh, you know what? I didn't know it was like that. Never mind, I don't want it. But then don't do it.
Yeah,
It's not for you. It's not
you
for
welcome it because you want to educate, but also the sizzle, right? Like, so break it down even further. Let's say you have a 20-year whole life policy. I'm just making numbers up.
Yeah.
You're contributing $500 a month. Just saying that.
$6,000 a year.
Right.
Okay.
$6,000 a year. At what point, what year do you start actually accruing cash?
About 3rd or 4th year.
So all right, so 3 or 4 years.
How about this?
Okay.
For sure, every contract, at least by year 10, that every dollar you put in, you should be just about break even dollar for dollar. Meaning this.
By year 10.
By year 10.
Okay.
So meaning this, in your example, $6,000 a year in about 10 years, right? So in 10 years in, you should be able to look at your values and say, okay, I have about $60,000 of value in here. Not just value, surrender value. Now what does that mean? I could surrender this policy and I'm going to get a check basically for 60 grand back.
Well, break that down. What does it mean to surrender a policy?
Surrender. So when you surrender a policy, you're basically canceling the policy. You're canceling.
Okay.
It's another word for canceling.
Okay.
But when it comes to cash value life insurance, they use the term surrender because you're surrendering the cash value. They're actually, the company's surrendering it to you.
Right.
And you're getting it back, right?
Okay.
So now, and then somebody told me that, like, all right, well, I get my dollars back, or I said, hey, what if you put in 60, but you only get $55,000 back, right? Would that be terrible? And some people go, well, I mean, I'd rather have all my money back. I said, you're right. I said, however, you did have life insurance along the way. The carrier
you were covered, God forbid
was
something happened.
assuming risk on you the whole time.
Right.
I said, and now you put in 60, you got back 55. You no longer have life insurance, so you lost $5,000 over the course of 10 years. That's $500 a year.
But had something happened to you over that 10 years,
they would have paid out the claim.
Your family would have been covered. Right. Right.
So I made that. It was actually an actual case that I worked on, and I looked at the numbers. They were younger and healthy, and I said, so if that were to happen, that means you had a life insurance policy for $500 a year every year for the last 10 years. I said, is that really a bad deal? I said, you're still covered. I said, name me. You have an insurance portfolio, whether you realize it or not. You have a home. That means you have homeowners insurance. You have a car, auto insurance. You have health insurance to work. You have dental. You have vision. I said, you have homeowners, auto, health insurance, vision, dental. If you canceled all those policies all at once, which of those companies will give you a check back because they say, hey, thanks for being a customer, here's your money back? None of them.
Yeah.
I said the only policy that would actually have that feature would be a cash value life insurance policy. I was like, so stop beating it up because that's the only one you got out there that can actually do it. Right? Yeah. So, but I explain to people, says that you got to fund it properly. You have to make sure you work with the right advisor that gives you the truth of how it's supposed to work. Even right now, I had a client of mine that said, hey, I want, she got a policy. She's 29 years old, young. She goes, I want this cash value policy. Perfect fit for her. She's just turning 29. She has a lot of time to build cash. Perfect. She said, hey, I want one for my mom. How old is mom? 59. And she needs something to retire on. This is not going to work. This is not a Hail Mary. You can't just start some kind of permanent life insurance contract almost at 60.
Yeah.
And expect by 65 that somehow you're going to live off the equity of that policy.
Let me ask you a question though. Yeah. Like, in a hypothetical, can someone fund their policy? Like, if let's say you get like a large lawsuit settlement, right? Can you explain that? Because somebody, I believe somebody can fund it.
Yeah,
right?
I'm actually working on a case with that now too.
All right. So give me an example.
So this person has a lawsuit settlement.
Hold on. I love this shit, guys. I'm sorry. I think about all the ways when I make money, I can kind of like, like kind of make it work.
So life insurance policies are very flexible in their contribution, just the amount of the death benefit you have, right? So let's say, for example, you end up getting a settlement for $250,000, right? Years ago, there used to be a lot of companies that would offer something called single premium. You could just do one premium one time and that's it. Okay. There it goes. They faded those out. So the best you could do is some companies will open up an actual account for you. It's called a premium deposit account. So the insurance company holds the money, and then every year they'll schedule a payment for you out of that bank, out of that account. So
a scheduled payment to send you?
To send to the policy.
Oh, to the policy.
So let's say, for example, it's $250,000.
Okay.
You want to put $25,000 away into it. So they'll say, okay, for the next 10 years, we're going to put $25,000 away for you into the policy out of this account. So let's go from this account to the policy and so on. There's sometimes you have a chance to put large lump sums, but there's always a room and a limit. It's called, that's actually put by the IRS that you can put in. So that's why we may tell people, listen, you can always put in a lot more, but talk to us first because the company might say, no, you can't. We got to make sure that it falls within certain rules. So it's not a complete. Some people make it also on Instagram or social media, make it seem like it's a complete 100% wash tax shelter. No, there's going to be something there. There's going to be a little bit of rules, but in comparison to other things, it's very liberal, the rules that apply.
Right.
But yeah, you could definitely use large lump sums and put it in there. And over time, just kind of put it in there as a way to dump in as the cash.
Well, the example I was searching, thanks for the explanation, but I was searching for another example. The example I was thinking about was more where you can fund a policy for a certain amount of time, and then once it's maxed out, it pays you back a dividend.
Oh, sure.
So talk about that. That's interesting to somebody like me because, I'm a high earner, right? But I'm self-employed.
Yeah,
so
exactly.
There's no pension. I'm not union.
No, you are your benefits manager.
I am the corp.
Yeah.
Right. So I have to figure out all these ways of living the lifestyle I like to live as I get older, because I don't want to be as working as much as I am. Exactly. So that's the one I was kind of interested in.
So, and I'll use it as a metaphor or analogy in real estate, right? In the sense of reverse mortgages.
Okay.
Now, how do reverse mortgages work? the lenders, you looking at the equity of the home, right? And then paying the homeowner, or maybe a monthly
if you break it down that way,
based on the equity of the home,
Right.
right? Now those dollars are tax-free to the homeowner, right? Because it comes in the form of a loan.
Correct.
That's the beauty of it, right? Life insurance works in a similar fashion. What you're using the equity, but in this case, it's not equity, it's called cash value. And you're going to use it on a loan basis to pay you.
Okay.
Right? Similar to a reverse mortgage. And another way, you're kind of reverse pensioning the life insurance. Now, what's the collateral on a reverse mortgage where the value of the home is collateralized, right? Right? The death benefit with the life insurance company is collateralized.
Is your collateral.
It's collateral. So that means that as you're borrowing, your death benefit gets lower and lower and lower and lower and lower until eventually it becomes a very, very small number because you borrowed so much during your lifetime.
Right.
But those dollars, because it's coming in the form of a loan,
tax-free.
It's tax-free.
Right.
That's the biggest part.
Right.
That's the biggest part.
And how long do they usually last?
The payments?
Well, yeah, because like I was thinking, like if I fund one, let's just say $1 million, and you put $500,000 into it, whatever. Is that like a 20-year draw?
Yeah, usually we try to keep. I've seen it where I designed it, where it maxes out the amount you can use every year without hurting the policy, without collapsing the policy.
What's the max you've seen?
So I've seen it usually about 10% of the actual value of the contract. So for example, if you have about $500,000 of cash value, maybe a little more, you're going to get between $50,000 to $60,000 a year of income off of that, right?
Okay.
That's using rough numbers without using a software to look at it. But I've used it where whenever I've designed a plan or illustrated a plan, I've told people, hey, listen, this is supposed to be the last bucket of any buckets of your retirement income because we want to use pre-tax investments, use those first. You want to tap into Social Security, use that first. You maybe have rental income, you're using that anyway because you got to pay taxes on it technically on that, right? The last bucket should be the life insurance policy because it's one of the things that's going to back you up. So whenever I look at it, say for example, like a person like yourself, I'll say, hey, you know what? Let's look at what this does for you at age 70 in terms of income. Let it wait, let it cook for a while. And from age 70 to age 90, what kind of income can you get? Because one of a couple of the risks on the way down, talk about the financial mountain, right? Climbing up the mountain, everybody's doing the same thing. Buying real estate, putting money into the stock market, maybe putting money, having a pension plan. And then when I get to the top, where they're going to build this wealth. So they accumulate the wealth. But at some point, you're going to have to come down the mountain. You have to decumulate the wealth.
Start using
the wealth, right?
Deploying the wealth.
You got to decumulate. And so on the way down, there's risks there. There's 5 of them. Mortality, passing away, morbidity, becoming sick, right? Tax risks, the government, they can make the change whenever they want. Market risk, that can affect your investments, affect your portfolio. And longevity risk, living too long, living way beyond what you thought.
Right.
So longevity, mortality, and morbidity are some of the things that life insurance contracts can help solve because of the fact that if you start dipping into the equity or cash value of life insurance policy at age 70 to age 90, that's going to help give you that window of time in case you do live longer than you thought.
Right.
Because I've had some crazy conversations with people, men typically, man, I'll be lucky if I make it past 65. I said, great, but what happens if you do? I was like, what happens if you're unlucky and you wait and you go to age 95?
Right.
Then what?
Then what are you doing?
Then he's like, oh shit, yeah. I go, yeah. I go, well, you think it doesn't happen? It happens all the time.
Yeah.
I was like, listen, it's not your choice. Unless you decide you just have a plan to kill yourself at some point in life. Yeah. I said, it's not your choice. I said, and you'd be surprised. I got perfect example. I got my grandfather who was put on hospice. He's been 5-6 years, he's been sick. The first 3 years he was put on hospice when he got sick, they took him off hospice. So he's actually he's still not good, but he's off of hospice.
He's better than hospice.
But he's better than hospice. It's like, so I'm pretty sure in his mind he's like, what's going to happen here? But he did, he's like, no, so he didn't have a choice there. I was like, so it can happen. So the point is, if that's going to happen, and you can't dictate whether your longevity is going to be a factor or not, you're better off having the money. And by the way, if you don't use the money, well, then that's okay. You're not going to spend it anyway because you passed away. There's a life insurance policy there that you have beneficiaries that will then receive the benefit of that policy anyway because you're going to be around. So who cares?
What is your opinion? Well, first, let me say this, and then I'll ask you that opinion question. So, as a mortgage/real estate professional, dealing with Henrys, high earners, not rich yet. I've learned that I've had to become almost like a financial advisor to some of them. I'll give you an example. I had one client who bought a really expensive condominium for a couple $1 million, and he had to get what's called HO6 insurance. You know what that is, right? For the people that don't know what that is, basically content insurance, the furniture, the wall, the appliances, all that stuff. The stuff that's not the walls.
Yeah.
Everything,
Yeah.
it's called walls in coverage, right?
Okay. Yeah.
Right. So we're going to closing. This was years ago. He goes, hey, man, that policy's kind of expensive. I'm like, okay, whatever. I'm like, all right, man, look, I'm not selling it. You need it. So he gets the minimum coverage. The minimum coverage, and I know these numbers for a fact because something happened. I'll talk about it. So yeah, it was $50,000 for rental. It was like $100,000 for inside, like all content. Boom, we closed, whatever. A few years later, he has a flood, right?
Oh, man.
It slipped my mind, but as a fiduciary responsible person now, I'm saying this out loud and videoing it so I remind myself. So when I went to visit him a few times, every piece of furniture he had was from a different part of America, of the world. Oh. Europe, Italy, Greece, like the table was $10,000. The furniture, the bedroom set was like $80,000. So I'm like, but I didn't put it together. The flood comes. And I got him a rental. It covered up to $50,000. But think about this. If I'm living in a $2 million condo on the water, my mortgage payment is like $10,000. If I have to move out and be displaced, I want to live kind of that lifestyle.
Yes.
Right? Guys are not trying to go to the hood and get like a... So I had to get him a house. Rent was $15,000 a month. Do the math. $50,000, 3 months. Right?
Wow. Wow.
Then he's like, hey, man, they're not covering most of my stuff. And I was like, well, you remember you told me it was too expensive? They're only going to cover $100,000. But they did a valuation, $600,000 in furniture.
Oh.
Yeah. So the moral to the story is this, guys. Insurance doesn't seem important until you need it.
Yeah,
right? Until you need it. Until you need it. So instead of having this like laissez-faire attitude, like I don't need it, I'm going to get away with it. I'm not saying over-insure yourself, but let's be real. Another example, my insurance went up for my cars.
That's happened across the board, by the way.
Well, yeah. Let me tell you my story. Yeah. So, but then I call my insurance guy. I say, yo, Pat, what's up, man? He's like, bro, you're driving an Alpina and an M60 is like, you got $300,000 of car in your driveway. What do you think it was going to cost? So it was just like a wake-up call. It's like, all right, man. So I gotta be aware, man. I can't be thinking like that. But it's a mindset shift.
It's
like
a mindset.
The guy buying the condo, being cheap on the insurance, now he fills it up with all types of stuff, and now he's mad. Did he take it out? Yeah. Is it something that I'll learn, like going forward with my clients? Like now I believe I'm working with other high earners.
Yeah. And
even if they're high earners, they're not like financially literate to see what could happen. And right. I guess as I pass on my experiences,
you have to.
Yeah, I gotta be like, yo guys, this could happen.
Yes.
You know what I'm saying? Like, and what do you? I mean, now this kind of comes to you. What is the attitude you feel? I guess, especially Latino. I'm always interested in Latinos because I know there was this generation that didn't give a fuck about the kids.
Yeah.
Right? And I feel like I'm the generation that cares a little too much about the kids. Mm-hmm. And I feel like my kids' generation is not gonna kind of give a fuck about the kids. That's how I feel.
Yeah. I do see the perspective changing.
Okay.
I would say because of the fact that, let's say people around my age group, mm-hmm. right? My age group was 40s, but I'm talking about also maybe a little younger or late 30s that were born here and they've seen their parents and they've seen maybe their family members go through some shit where somebody didn't plan ahead, right? And then everybody had to.
Isn't that the case though?
Yeah.
How many? I mean, look on the record. Yeah. How many people I've had to bury a few of my family members because there was no money. There was no money. I got the call.
Yeah. I saw it where one of my grandparents, they passed away, and thankfully my family was doing their job and putting dollars away for her, and there was money there to bury. But if that wasn't the case, there would have been no money.
Yeah. The saddest thing I see, I don't mean to cut you off, but I have to say this. The saddest thing I see, man, is when you see people put GoFundMe accounts to bury people. I'm like,
totally.
Really?
GoFundMe was never meant to be a substitute for life insurance.
Yeah. And that's what it kind of become.
Yeah. And I tell people also on top of that, we're talking about the biggest, not the biggest, but one of the big, I would say, financial buzzwords that we've come across in the past couple of years, rightfully so, because I'm involved with a lot of realtors, is generational wealth.
Yeah.
Right? Generational wealth, which is great. I get it, generational wealth. But if you're just glossing over or just avoiding the conversation of life insurance, you're really missing the boat of generational wealth.
So you're not insuring your investments.
You're not insuring your generational wealth. That's what you're not doing, right?
You're not securing it.
Yeah, it's not securing it and then they're saying, well, it's real estate. Well, it's not just real estate. There's other things too. And if you're not partnering it with a life insurance policy, that's one of the most generously, congressionally approved tools are out there for not paying taxes after you die.
Yeah.
Why? What you're missing? You're missing. I said the ultra wealthy and the wealthy, they, without hesitation, have a life insurance policy. Some of them are trust owned. That's the other thing. Trust owned life insurance. Listen, somebody told me about that. I said, yes, it's important to have trust owned life insurance. But I asked the client, well, tell me, what kind of trust and why do you need it?
Mm-hmm. He knows.
Quiet. He's like,
Yeah.
I don't know.
I know what trust is.
I saw a TikTok video. I said, I get it.
Yeah.
But why do you need it?
Everybody's going on TikTok.
I'm like, why do you need it? And what are you trying to accomplish?
Yeah.
I said, so for example, you just bought your first house. Great. And your house is worth $500,000. I said, so what are you trying to do with the trust? I said, do you have an estate tax issue? Do you have a special needs child? Like, as you realize, there's like about a dozen different trusts, right?
Right.
And then you got to talk to an attorney, see which one is a fit for you. And they're like, oh, okay. I was like, let's take a step back here before you go that direction. So, but I am noticing that the perspective, especially with Latino talk about Hispanics, are changing in the sense, even actually the ones that are newer. I've had a person request life insurance, but they didn't have their social security number yet.
Oh, damn.
Yeah.
Okay.
But because also, well, maybe I can see the other reason why, is that part of the, I guess, the immigration process, in order to get their papers or green card here,
they need to get life insurance?
they're going through marriage, right? Showing financial ties with your partner helps the case.
Okay.
So typically when you go through that, you have to open
Chris Cabanillas, pay attention.
Right? You should be opening a joint bank account, right? To be able to present that case.
To show
you're
together.
You maybe show you're both on a lease agreement for an apartment, whatever. Something that a life insurance policy. She's my beneficiary. I'm hers. Like it just paints the picture. Like we're a couple here. We're gonna do this. We're getting married.
Absolutely. And I think life insurance also works well for families that have, you always have the guy who's out there, or guy or girl. I keep saying that. You have the person who's out there who's actually establishing, who's galvanizing the family to buy real estate, to do this, like the mover, right? There's the mover. But they're like sometimes once in a generation. They're not everybody's that girl or person. Not everybody's him, right? So the thing becomes, life insurance actually gives, I had a conversation with my wife the other day. I said, look, I have this amount of life insurance for the kids. She goes, well, that's not enough. I'm not going to say how much I got, but I think I have a lot, right?
I think you have a good amount.
I think I have a lot. And I was like, yo, my job is to make sure if I kick it, he has at least enough stability to figure out what he wants to do.
All right,
my job is not to make him set for the rest of his life, because I think that's where people, people kind of get that twisted. It's like, yo, it's so that there's no big disruption in their life. If they have to finish school, if there's certain milestones you want to give your kids the ability to finish, even if you're not around.
Yeah. And talking about the perspective, years ago, let's say, okay, how about this? In 2010, when I would say $1 million of coverage, typically it was the guy, I'm not going to say that right now, would say, oh, no, forget about it. I pass away, $1 million goes to her. She can enjoy it with some other guy. That was like the macho freaking.
That was a real Latino thing right there.
It was, yeah. I don't know. I get it.
Hola.
But then now, fast forward to 2023. I had the same conversation about dollars, about $1 million now. $1 million is not what it was.
$1 million, like $100,000.
$1 million. If I was like, who's getting rich of $1 million check? I said, because when I look at their financial picture, and I said, okay, you have a half. First of all, especially this particular cases that I'm seeing, if they've just bought a house.
Mortgages.
I go, you have a $500,000 mortgage. Let's just start there.
Right. So half.
I go, there goes half Eddie. If anybody remembers Eddie Murphy Raw. So I think only you and I got that check.
Yeah.
So half
we're in the 40-year-old category.
So you go half. There goes the bank. Half goes to the bank.
Right.
Now you're left with $500,000.
And let me stop you there.
Go ahead.
It's not just the mortgage, and then she has she or he.
Let's say he or she.
Right. You have the taxes. You have the carrying cost of a house. People don't factor that.
Factor it in.
Yeah.
So let's say your taxes, let's call it $15,000 a year, plus you got to carry.
And that's cheap.
Let's call it $5,000 a year to maintain your house. So it's like $20,000 a year.
Yeah. And he's going cheap.
I'm going cheap.
Yeah.
For the next 5 years, $100,000. Right. There it goes right there. Now you're down to $400,000. Let's pretend you have 2 kids.
Oh, forget it.
And those 2 kids are young. You got to support those children.
Yeah.
And also you want to put money away for college. And I told to parents, I said, what if, because they say it's hard to figure out if you have a 2-year-old and a 6-year-old, what college is going to cost by the time they're 18 or 19
Yeah, it's hard to forecast.
I said, but let's just pretend this. Let's pretend that both of them are 18 today, and you wanted to write a check for 4 years of college for each kid now.
Right now.
Let's say.
How much?
And then on a cheap balance, call it $25,000 a year. That's $100,000 in 4 years, $100,000 per child. I said, your $500,000 mortgage is paid. $200,000 for the kids.
That's just college.
That's college.
That's college.
I got $300,000 left. I was like, you see how quickly the $1 million gets chopped down?
Yeah.
I said it's not. I was like, $2 million, that's a different story. A little more comfort.
Right.
Like $3 million, yes, a lot more. I was like, but $1 million, those days are over.
Yeah, $1 million's kind of like a gift, parting gift, right?
Yeah.
If you don't have
$1 million,
anything.
though, at least will give your family choices.
Right.
Now,
right.
zero.
They don't have to work off of what's the word I'm looking for? It's abundance and scarcity. They don't have to work out of scarcity. They're like, oh, what are we gonna do? What are we gonna do? We can't eat tomorrow. Yeah,
they'll have choices, and that's the important part. I tell people also, with regards to the remove any kind of ego when it comes to this conversation. But when it comes to the emotional part, I tell people, look, a life insurance policy is never gonna fix a broken heart.
No.
But it'll heal a worried mind.
Yeah.
It'll alleviate those financial stresses that happen when a loved one passes away. That's the important part.
Especially if the loved one is the head of household.
Yes.
Because the rest of the family has no idea.
Yeah.
Right? With the cost of everything.
Yeah, exactly.
Right? And then you get a wife I've seen this before where they don't have any idea what to do.
Or a husband.
Yeah.
A husband that has no clue.
Right.
And the woman's just the head of the household, strength of the household. So call more the leader.
The leader of the household, right.
And if she's gone, that's a big problem too.
Right.
So both parties have to be insured for sure, because then also I always tell, listen, I'm sure that the game plan wasn't for your kids or your family to suffer, right? I want to make sure if it's in my position and I have a family and children, I say, listen, I want to make sure that my spouse and my children are successful whether I'm here or not. That's my job. I can't control whether or not I live forever or live long enough. I said, but I can take actions today so my family won't be volunteers, right, in that situation.
Right,
they won't be victims.
They won't be victims, right.
Volunteers.
Right.
No, because I made sure that they'll never be in that situation because I'm not choosing to be a volunteer or a victim. I'm taking action now to make sure that they're taken.
Have you ever sat with somebody, a couple, and then one of the people of the couple, is that the word?
Yeah, sure.
One of the partners in the couple. There you go. Feel very uneasy with the conversation.
Totally.
Right. So
uncomfortable.
Yeah, but why?
Because it's facing your mortality.
Okay.
Facing your mortality, it's asking the tough questions about mortality.
Right.
And sometimes they just don't want to face it, as if it's never going to happen.
But why not be prepared?
Right.
Right.
Exactly.
That just becomes the thing. It's just about being prepared.
Yeah.
It's like, why do you go get a checkup, bro? To make sure.
Yeah. I remember it was and I've had some crazy ass objections of people trying to throw me off and say,
Let me hear one. We're not saying names though.
Yeah, no, but he used religion on me, right? He used religion. He's a Christian. He said, no, I don't believe in this stuff. I'm a Christian. I was like, I don't know that to deal with it. Okay.
Forever.
Yeah. I'm like, well, so am I. So I go to church on Sundays. I said, hold on. So what do you mean? I said, so it's not right to have this money and put aside for your family in case you pass away. I said, no. And I said, well, you're a Christian. I said, why do you go to church every Sunday? I said, eventually, I'm hoping that you're gonna meet the Lord one day and go to heaven. I hope so too. That's why I live my life the way I live. I said, but in order for me to get to heaven, do I have to die to get there? I was like, and I don't know when.
We're gonna walk through.
I was like, do you know when? I was like, you're not supposed to know when. I don't know when. I was like, so then how does that work? I was like, so you don't think you're ever gonna pass away? Because then that means you're never going to heaven. Right. And then he was like, all right. It was like a mic drop. I was like, all right.
But the answer was, I don't believe in life insurance because I'm Christian.
He was spinning it around on me, trying to use it as I was like, nah, man, I was not gonna work. The other part was, the initial one is like, well, nothing's gonna ever happen to me anyway. I saw how you sure about that. I was like, nothing's ever gonna happen to you. Wow. I said, wow. So I don't plan on dying anytime soon. I said, neither do I. I said, but I got life insurance. I was like, I don't understand where that comes. I was like, you're just scared, dude. You're just scared. It's okay. You're scared. I don't plan. Who plans?
All right, here's a question that a lot of people won't ask, but I guess I'm asking also just for the people that are listening, because I want it to be comprehensive. I know a lot of people have questions. They're like, nah, I'm not gonna do it. All right, so God forbid someone passes. Mm-hmm. What becomes the other person, like the person left, the partner left? How do they acquire life insurance? They call them, or is there like a special hotline where
right.
You know what I'm saying?
The beneficiary, right?
Yeah,
So when I speak to my clients, I say, listen, this is the thing that's happened to in the past, a big mistake.
Okay.
A couple of mistakes when it comes to beneficiaries. That's actually a good point to talk about. Number one, putting your kids as beneficiary. And I say kids, I mean minor kids.
Okay. Yeah.
All right.
Yeah.
Adult kids, different story.
They don't have rights. They can't sign it.
Right, they can't. They can't receive. You put $1 million in a policy, and you got your 2-year-old and 5-year-old in there. You pass away. They can't receive that money.
Right. So they're basically indigent until they're 18.
Yeah, that money's gonna be locked in the freaking trust account by the insurance company until they're old enough to be able to legally receive it.
I don't want to sound morbid. If they make it that far, because with no money, what's your
then what?
Yeah.
Right? Who's taking care of them? It's just a big mess. So do not do that.
Okay.
If you have minor children, make sure there's an adult on there that you trust that could be a beneficiary. The other part is beneficiary wise, making sure that the beneficiary knows that they're the beneficiary. Oh, really? I've had people that said, "Oh, but I don't want them to know about." Why would you want them to know? I said, so you pass.
They might kill me.
All right. Oh, yeah. Oh, I heard that. Oh, they might kill me. Okay, great. Okay, how about this? Hide this policy. They're never going to know about it. You pass away from a heart attack. They didn't kill you.
Right.
I said,
now what?
Now what?
The insurance company wins.
I said,
now they got paid for nothing.
I was like, you want somebody to get the money though, right? I was like, so where's the money go? I said, nowhere. I said, I'm not going to know. There's no like red. There's no hotline. There's no Amber Alert that goes off my phone and says, "Oh my God, this person died." Right? That doesn't happen.
Time to pay.
Yeah. So it's like, so then all of a sudden, this company, they're going to see you're not paying what's going to happen is they're going to see you're not paying your bill. No longer along. Then your policy, they'll send you some notices in the mail. Nobody's going to read it because nobody knows you have this policy. Right. Your policy will lapse. It'll then it'll no longer be active. Out of nowhere, somebody's gonna go through your drawers because they'll be like, "Oh my God, I lost my husband, I lost my wife, I lost my aunt, my titi, my uncle." And all of a sudden they find, "Oh my God, they had $1 million life insurance policy. Hi, life insurance company, they died. What did we do?" They're like, "Oh well, this policy lapsed a year ago. Sorry, there's no life insurance anymore."
Yeah. At the end,
what was the point of that?
And I'm not saying that it's done on purpose, but at the end of the day, the life insurance company wins.
Yeah.
Right? Because they got paid for nothing.
They got paid for nothing.
No offense, but it was on him.
It's on them to make sure they tell somebody. So I was like, don't keep this a secret. Tell your beneficiary, hey, you're the beneficiary of this policy. In case something happens to me, this is who you call. Right. You call Darwin. He's the advisor on the plan. Okay. Call him to make sure that he knows. Or if not, for whatever reason he's in around, he's out of the country or some shit. Here's the name of the company. Call them. Tell them. Here's claims. That's the number. Hey, somebody passed away. I need to know exactly. Okay. That's it. They have to have the emergency system.
So they have to have what? They have a copy of their death certificate. They send it over.
Oh yeah, the claims process. I always tell people this: whenever somebody passes away, ask for several copies of the death certificate. Okay. Because most institutions want to see an original as opposed to just a copy.
Really?
Yeah.
Okay.
So, like, say for example, the person has a pension and they have Social Security and a life insurance policy and 2 bank accounts. Right there, that's 5 you need right there.
And all of them the originals.
All the original, because the Social Security wants their own.
Right.
And then the banks want their own. And then the pension fund, whoever wants their own. The life insurance company wants one too. So you're going to need several copies. So ask for like 5 or even 10. Doesn't matter. I mean, if you get 10, you don't use them all, who cares?
Oh, listen, let me give another PSA. This happened recently to somebody that I know. They passed away in the hospital, and their widow was notified almost immediately about Social Security benefits being revoked. So there must be some sort of system going on now. Just
wow,
I know guys. I know a lot of guys like we can just chill, get the check until it's over. Nah, man, people are finding out quickly.
Yeah,
people are finding out quickly.
Yeah. Wow.
Yeah. So I'm just a little PSA for you.
And you know what? By the way, I have a relative in another country. And she was
non-extradition.
Yeah, she was receiving her Social Security. She passed away,
and
then her son, who was I guess also receiving some of those dollars, the money stopped out of nowhere.
Really?
And I think his initial thought was like, oh, somebody must have ratted me out. No, the system caught up.
Yeah,
something caught up.
Yeah,
something caught up.
Yeah. There has to be something that they're starting to cross-reference because it's too fast the way it's happening.
Yeah. Right. I'm just curious how they caught up, but because that was another country.
Yeah.
Like, how do they know that?
Yeah. That's crazy. All right, listen. We went over a few things today, but I really feel that these conversations are useful for people, man. Because I feel that sometimes people are afraid to ask the question, or maybe they get in front of a professional and they're kind of embarrassed. Like, what do I do? And then if they're with their spouse, they don't want to sound like they're fucking being nefarious.
Exactly.
What if she passes away? How do I get my money? Like, what? You know what I mean? Like, so I think these conversations are really, really important. I want to thank you for being on the show today.
It's my honor all the time, man.
If people need to talk to you about life insurance or to be on the magazine.
Sure.
Please speak to the camera. Let them know.
Reach out to me directly. My cell phone number is 908-590-1653. That's my cell. Text me. call me, whichever. I'm
What about IG?
An IG, it's called life_insurance_mercenary. And for the magazine is at Central Jersey Real Producers. That's the magazine handle as well. So you can reach out to me, whether you're a realtor in New Jersey or somebody as a lender or title insurance broker in Jersey or outside of Jersey. As you can tell, we're outside of Jersey, and there's still a benefit working with Jersey clients.
Absolutely.
You only cross the bridge.
Especially if you're a national lender, you can definitely hit him because he has access to the top 500 producers in his sector.
Yeah, and there's plenty of room for
proximity.
everybody.
Yeah,
there's definitely an abundance, not a scarcity out there.
It is.
Yeah.
All right, guys. Ask Louis Omar everywhere. You know where to get me, and I'll see you on the next one.